In this video, you're going to learn about two big things, the AMC double squeeze, and you're going to learn how I just made $11,000 of profit in 7 days on AMC stock with a special type of call option strategy. You're going to want to watch this one. Let's get into the content right now, right after I mention that you should get 40% off the amazing programs linked down below, where I share all of my buy, sell alerts, all my strategies for options and trading in the courses linked down below, with a sample coming up in this video. The 40% off coupon code does expire in 2 days, link down below. Hey everyone, me Kevin here. Let's talk about an AMC double squeeze and the potential for this. First, this video is actually inspired by a conversation that I had with a course member yesterday in the Stocks and Psychology of Money group. A course member was wondering, hey Kevin, it seems like at one point you had indicated that there was a squeeze at AMC, and they were looking for some additional details on that because the implication was that maybe that meant I thought the squeeze was over, which is not true. Now, this particular course member is a course member of my real estate agent course and not my Stocks and Psychology of Money group. It's worth mentioning because I've made it very clear to Stocks and Psychology of Money course members that I believe there could be multiple squeezes at stocks that are responsible for increases in price rapidly. That's of course not the only thing that leads to price going up, but the reason this conversation got spawned is because there was some information circulating the internet yesterday that if you look at the beginning of June, around June 2nd, June 3rd, and you look at the short interest of AMC somewhere around 20%, and then you compare that to the short interest where we were, or are now, I should say, where we were on Friday because we were talking about this yesterday, or where we are now, somewhere around 18, 17%, then all of a sudden we look and go, wait a minute, how did the price go from lows to where we are now if the short interest only went down 2 or 3% over the last essentially month? That seems odd. That kind of implies like the squeeze ain't squoze. And don't get me wrong, I'm not saying the squeeze is squoze. I just think that there's no such thing as the squeeze, that there are multiple squeezes that can happen. Now, we've talked about why I believe this before in the past, but it's worth just doing a short reiteration on this and then looking at some of the latest data. So a very short sort of recap on this is if we go into the Ortex chart, we could see it pretty well here. We could see short interest right here, the estimated short interest as a percentage of free float, which is the yellow line, correspond with a potential rise in price and then a subsequent massive decline or rapid decline in the short interest percentage. Now, because these are estimates of short interest percentage, you do generally get a little bit of lagging data. But what's fascinating is, and these are the lessons that we could take away for the next phase. Take a look at this, folks. Look at what happened with AMC at the beginning of the year. At the beginning of the year, this is around January 28th, at the bottom, you're gonna see those blue candlesticks. Those represent volume. Volume goes up dramatically, price goes to the moon, we get a gamma squeeze because people are buying out of the money call options that are going into the money, and all of a sudden the price skyrockets up the next day, and the next day we start getting short interest as a percentage of free float estimates coming out with settled T2 data, and all of a sudden, boom, we see short interest percentage plummet. But look what happens. As volume subsides, all of a sudden price slowly bleeds out at the stock, and what do the short sellers do? They reload the shotgun. They set up for the next squeeze by increasing the amount of shorts they have, helping drive the price down and bleed the price down. Now, if we go to today, virtually the same thing is happening. So first of all, if you compare the beginning of June, right around here, this is June 2nd, as I said, and you look at an estimated short interest percentage of free float of 17.47, and then you compare that to where we are now, it's like, wait a minute, actually now with the latest data, we're at 18%. And so in the tweets that were circulating or the online talk that was circulating, these lines were pretty much par. And so the argument was, hey, there's no way the squeeze could be squoze. But again, To me, there's no such thing as a singular squeeze. A singular squeeze implies binariness. It implies it either happened or it hasn't happened. I personally believe that is a big mistake, especially when it comes to a stock like AMC. In fact, this was what the chart looked like yesterday when I did this research. And this is using all Ortex as well. And right here, you can kind of see the same thing. It's like, wait a minute. Like when you compare the left peak to the right peak, it's kind of like if you just look at those two data points, you don't realize that what happened in between was a big old plummet in the short interest. See, the rumors that were circulating online were only circulating the data points for those two peaks. And to me, it kind of looks like an evil, angry monster. See, if you put circles around the information that was circulating online, it's an evil monster of disinformation. Or maybe I shouldn't say disinformation because I don't think people are intentionally sharing wrong information, but it's an evil monster of misinformation. It's very important that we look for inflection points in trends. Now, folks make arguments that say, hey, look, Kevin, 18% short, this is historically high. This is true. 18% is very high historically. There are a lot of different definitions for at what point short interest is deemed to be very high. Some articles say over 20%, some say over 30%, and that's when you get into the extremely high short category. Over 10% is deemed to be high short. Ultimately, though, to me, we have to look at relatively how much are the short sellers concentrating into individual positions, especially relative to the past. And what's interesting to me is when folks say, hey, Kevin, the squeeze ain't squoze yet. I'm like, wait a minute. I'm not saying the squeeze is squoze. I'm just saying a squeeze happened, and I think we're setting up for another one. I think there was a squeeze around January 28th when we just saw on the charts short interest plummet. I think there was a squeeze right here on the left eye of this cookie monster, or whatever monster you want to call it, the misinformation monster. I think there was a squeeze at this left eyeball. And as short interest plummeted, take a look at the chart that we have here. As short interest plummeted, what happened? The price went up. Now remember, the yellow line is lagging, so it's natural for the yellow line to come after the green. But the point is, the price went up, squeezing the shorts out to cover, shorts cover, volume goes down after a big squeeze. You go into a little volume hiatus, which we've had over here, little volume hiatus leading to lower prices. At the same time, as we start consolidating, guess what happens? The short sellers reload the shotgun. They fill up the shotgun again, ready to attack again. Folks, this reloaded short interest of 18.72% is setting up, in my opinion, for the third AMC squeeze. We had one around January 28th. We had one right here around the beginning of June, the end of May. And I think we're setting up for another one now. Now, no guarantees. Pricing is higher now. Volume is also lower. It's possible that some momentum has left AMC for the time being as folks have gotten distracted by, maybe Clove is owned by Citadel and now all of a sudden Clove is getting pushed and now it's Workhorse or now it's this or now it's that. Fine, whatever. But the point is, this latest data at 18.72% short, with just 13.63% short interest as a percentage of free float 7 days ago, in my opinion, it's entirely possible we're setting up for another move, which is really making me tempted to take some profits on my latest option strategy while AMC has been trading sideways. Wait a minute, Kevin, wait a minute. How can you profit on AMC stock when it's trading sideways when you said you were gonna have all of your shares and you weren't going to sell them? Well, I'm not selling my AMC shares. In fact, I still have them. In fact, I'm gonna prove it to you and I'm gonna show you how I just made $11,000 of free money. Boom! That's right. This is my AMC position on Webull. Now you're gonna see this little 174 buy and sell. You can kind of ignore that. That was supposed to be a really quick swing trade, but I had to go, so I set a trailing stop and it stopped me out. And because it put it through as a market order after the stop, I ended up losing 20 bucks on that. That was like you could just ignore that because we want to talk about how I just made $11,000, actually a little bit over $11,000, $11,524 on AMC trading sideways and why I closed it out. Okay, you ready for this? So what I'm gonna do is I'm gonna grab my order history here. grabbed a couple shots. I just executed these trades. Well, actually, the closing trade I just executed. And so here you go. This is a trade that I executed on June 21st. As always, I send all my buy-sell alerts to everyone in the Stocks and Psychology of Money group. That 40% off coupon code link down below does expire in 2 days. So here's what I did. I've got my $75,000, $80,000, whatever dollar position in AMC. And I've got about just over 1,400 shares. So what I did is I sold an $80 July 9th call on those AMC shares. So now that sounds bearish, but it's not, in my opinion, because I'm simply trading. My expectation is not to get called out at all. And so what happened last week was I saw the short interest declining and, well, yeah, June 21st. I saw the short interest declining and I thought, okay, until we get the shorts reloading their shorts, probably not going to see a new squeeze until we get reloaded up back to 18, 19, 20%, which is kind of where we are now, okay? Which is also why I'm closing that, because I don't want to get called out. I don't want my underlying shares to be at risk. So I sold an $80 call for July 9th, which, folks, is in like 10 days. And I sold this call at $9.80. So what you do is you do $9.80 times 100 per contract times 14. That means I got a $13,720 credit for giving somebody else the right to buy AMC at $80 on July 9th. But I thought it might trade sideways until we saw that volume coming back and the short interest going up. Now that the short interest is going back up, I decided to close this position because I don't want to lose my shares. I'm diamond handing those. I just want to make money in the meantime. And that's what you come to this channel for, is to learn some perspective in how you can pick up some money in the meantime. That's what I teach, okay? So today, we're seeing the short interest go up. We also just saw a dip on the AMC chart. And so for me, this was like perfect timing. So if we go to the 5-minute AMC chart, I literally just executed this trade at, it says here, 1337 Eastern, which is 1037, which is basically right here. As soon as I saw the reversal of prices going back up, I knew it would become more expensive for me to buy that call back and close that position. So as soon as I saw that reversal and I knew we were below the VWAP on that trading line, I thought, you know what? This is a perfect time to buy back that call position that I sold. So I bought back the call position at $1.98. So I bought the same 14 positions back. So I bought a call back. And take a look at this. I'll show you the calculation here. I just made $10,976. Now, I know I mentioned a couple seconds ago, like 30 seconds ago or whatever, that it was somewhere around $11,500. My bad. It was only a $10,976. Slight little math typo there. But now we have it correct. And again, that's corroborated by the screenshots I showed. I sold a call for $9.80. This is the sold call. This is the money that I got. I then subtract out what it cost me to buy that position back, which was $1.96, leading to a profit of $10,976 in 5, 6, 7 days. So in 1 week, I made a profit of $11,000 on shares that I'm diamond handing anyway. So I basically got a free $11,000 with that move. Now, it's going to be something to pay attention to. Right now, AMC stock has been fluctuating a little bit. In the day, it did have, at one point, a relatively strong movement in the day. I'm going to go to the 5-minute candlestick so we can see this a little bit better, and then we'll also go to TradeView. We can see on the 5-minute candlestick, we're seeing volume evaporate a little bit right here, and we are seeing a downtrend within the day. Could be a shorter-term consolidation. However, my big thing looking forward for AMC right now and over the next 2, 3, 4 weeks is really going to be watching for a resurgence in volume, which could potentially lead to another squeeze. Right now, we're not quite seeing that yet. However, the day is not yet over. On the 28th, we already have a volume bar on the 28th that's larger than Friday's volume bar. Given that we still have another 2.5 hours of trading, I would expect our volume probably is going to look a lot closer to June 21st, June 22nd, where we're somewhere around 150 million shares traded, unless volume falls during the day. I do think we're going to be over 100 million shares traded today, which is going to be good. If we get this continued push, you're going to want to watch AMC very, very, very carefully. I also am going to be looking at this very carefully for options trading. Personally, I don't have any short-term call options. I'd be, maybe if I were looking at calls, if I were ever going to do calls, certainly I would go into this careful. I would go in probably with 45 to 90 day calls at the shortest term. And I would use that as a smaller portion of my portfolio, or whatever I was willing to put on AMC. And then I'd probably go with Jan 2022 call options if I were really planning for this squeeze to come. So for example, I would stay away from anything sooner, in my opinion, and this is not financial advice, just for entertainment purposes only. I'd probably be looking somewhere at the AUG 20s. And let's get to calls, not puts. There we go. So I'd probably be over here looking at maybe a $40, $40 in the money call. You've got some high implied volatility here. So if this volatility goes down, the value of these options is going to get crushed. So you'd have to be really, really comfortable that we're going to see a third sort of squeeze sometime within, the next 2 to 3 weeks. That's going to be something to keep an eye on. Now, what I am going to do is also go out to Jan, and I would say over here in Jan 2020, you probably want to look at also the 40s. You've got massive open interest here. The implied volatility is about 50% less. It's still very high at 148%. They're a little bit more pricey today. If we get a red day tomorrow, you could probably get a cheap deal on something like this out here. Personally, and you know this, I trade with less than 1% of my portfolio. Less than 1% of my portfolio is exactly what I trade with. And so when I trade, individual trades might only represent 0.25% of my portfolio. So by no means am I going all in on any trade. Doesn't matter by conviction level. I will go all in though on long-term high conviction plays, which of course we regularly talk about, whether it's on the channel or in the Stocks and Psychology of Money course, link down below. So we do have a little bit of this rotation here down on the minute chart for, this is AMC calls. So let's go ahead and get AMC chart itself up. There we go. Now we've got AMC up on the minute chart, kind of rotating down here on the minute. If we go out to an interval of 5, we're going to get a little bit of a better view on the actual day here. Let's go out to 5 minutes. There we go. This gives us a day view here on AMC, rotating back down to roughly where we opened. We did open pretty much flat, did run up about 4 or 5%, now sitting around that 57 level. I'm going to be keeping an eye on this. If I were to buy a call, it'd probably be over here. I don't know that I would sell calls at this point. Selling calls has been very profitable because the short interest has been falling and the implied volatility hasn't been. So you've been taking big premiums by selling calls, which I know some people hear selling call and it's like, oh my gosh, that's bearish. It's just a way to make money during a sideways trading market. But with this Cookie Monster here on the short interest chart, I would probably caution against new sold call positions with the short interest increasing here, but keep an eye on volume. So these are some of my thoughts. We'll see if I make any kind of trade. I'll make sure to send out alerts as I regularly do. And Stocks and Psychology of Money, that course coupon code does expire in 2 days. And folks, these are my thoughts on the setup for the double or the triple on AMC. Squeeze. That is the second or third squeeze, however you want to look at it. Second recent, third over this year squeeze for AMC. My thoughts. Thank you so much for watching, and folks, we'll see you in the next one.